to summarize, in my own situation, I do a bit of both. I reinvest in companies that pay the dividends, and in other cases, I'll pool and reinvest elsewhere. If I had to peg myself in one of the two buckets, generally I'm in favor of reinvesting in the company that paid the dividends. And that's what I'm doing most of the time, although selectively, I'm not doing it in certain cases. Hey everyone, it's Ian. I'm back with another video about dividend growth investing. Happy 2018, Happy New Year everyone. So excited to be here filming my first video of 2018. As you can see, I've got some new studio equipment here, still trying to figure everything out, but it gives me a lot more flexibility in filming videos about dividend growth investing. So today's video is in response to one of your questions. This is actually a question I've received a few times now on my PPC Ian YouTube channel, and it's about reinvestment of dividends. So I invest for dividends and cash flow. I invest in stocks that pay increasing streams of dividends so that one day I can live off of the cash flow that's generated from my stock portfolio. And in one's journey as a dividend growth investor, one receives dividends over time, and I don't use those dividends right now to pay expenses. I reinvest all of them. And the question that I receive goes something like this. Hey Ian, when you receive these dividends from companies and you reinvest them, in the short run, obviously long run you're going to live off of them, but in the short run, when you reinvest these dividends into companies, do you reinvest it into the same company that paid the dividend? Or do you reinvest the dividend into a net new company or a different company, one that might be on sale or a value? And there's really two schools of thought of this in the dividend growth community. One is like, hey, just reinvest it in the company that paid the dividend, keep it simple. And the other school of thought is pool all your dividends and then buy stocks that are on sale with the dividends. It doesn't have to be reinvested into the company that paid it. Sometimes one may want to pool the dividends and then reinvest into a company that's on sale. So I want to cover that question today, as I always do. I've got my notebook and I jotted down some notes, so I'm going to go through my notes right now. I've got some good notes on this topic. So as I go through this video, my strategy will unfold, and you're going to learn that my strategy is a little bit of both. So at a high level, one of the most important things that one should look at in the decision of whether to reinvest into the company that paid the dividend or to pool dividends and reinvest into other companies, ones that may be on sale, in my opinion, and something that is completely overlooked, is weighting. In my dividend stock portfolio, I have over 30 stocks. Although they are not weighted equally, there are certain stocks that I consider core holdings. There are certain stocks that are kind of medium holdings, and then certain stocks that are small/complete ancillary holdings. They all play a unique position in the portfolio, and I'm happy and proud to own all of them. But when it comes down to it, when something is a core holding, I will generally reinvest the dividends that that company pays into that same stock. Because it's a core holding, I want it to be huge. I'm in this for many decades, and whether that stock is on sale, whether it is not on sale, if it is a core holding, I will generally reinvest into that stock, same one that paid it. Now, if something is a medium holding or an ancillary holding, maybe I'll give myself a little bit more flexibility. Maybe if those companies paid a dividend, maybe I don't have to reinvest it into the same company that paid the dividend, but rather maybe I could pool some of those and reinvest them into a stock that's on sale, or pool some of those dividends and maybe even reinvest them into a core holding. And so these are all things worth considering, but in this very topic, one thing that I think many investors overlook, and sometimes in the past myself included, is the fact that not all positions in one's portfolio are equal. And quite frankly, just because something is on sale, one doesn't want to over allocate to something on sale. That's another risk. And another thing worth being careful of in crafting one's dividend stock portfolio is this temptation. Hey, it's on sale. Should I be pooling all of my dividends and putting them there? Well, Maybe not. Even if something is on sale doesn't mean it's going to be a core holding. So one really has to look at the future of their portfolio. 5 years, 10 years, 20 years, 30 years from now. Which stocks are going to be your core holdings? Which ones are going to be paying your bills? Which ones do you want to rely on? If one of those is on sale, certainly it may make sense to pool some dividends and invest in that. But if it's not a core holding, if it's an ancillary holding, one may want to be very careful about pooling dividends and putting all of the dividends into an ancillary holding. So for me, when it's a core holding, I like to reinvest in those companies. What else did I jot down today? I think this is very similar, but it's a element of waiting. In one stock portfolio over time, it is possible that certain positions get too big, and it's possible that certain positions maybe they feel a little bit small. If something is a core holding, it's very hard for it to get too big, in my opinion, because it's a core holding. I want it to be big. I have no problem in my own portfolio, for example, having as much as 10 or even more percent in a single stock if it's a core holding of mine. If it's a world-class company, one that is going to be the bellwether of my portfolio in the long run, I'm okay with that. So certainly if something gets too big in that sense, I'm okay to continue reinvesting in the same company. However, let's say something that's a medium holding. Maybe it got ahead of itself a little bit. Maybe it's become large. Maybe it almost looks like a core holding because my medium or my small ancillary position did really well. In that case, I will sometimes selectively choose to not reinvest anymore. If an ancillary position has gotten ahead of itself in the overall structure of my portfolio, in 30 years, I don't anticipate that ancillary position being a core holding, one of the bellwethers. I will choose to not reinvest. And that's a way to deliberately shrink that position over time in comparison to everything else. And look, one day when the portfolio has grown to a certain position, it may make sense to add to that position again when it's gotten back down to the appropriate weighting within the portfolio. But if it's not there right now, I have no problem opting not to reinvest dividends in that non-core medium or ancillary holding. What else? In this conversation, one ought to not forget about new capital. So certainly in growing the snowball effect of a dividend growth portfolio, it comes down to three things actually. Time in the market, reinvestment of dividends, which is the topic of today's video, and new capital added, capital infused into the portfolio. And so sometimes in the dividend growth community, when we're asking ourselves this question, should I reinvest in the stock that paid the dividend or not? At the end of the day, it's an important decision, but I would urge myself at least not to think too seriously about this, because at the end of the day, the new capital that is infused in the portfolio is going to have, in my opinion, an even greater impact. And so for me, if I want to balance the portfolio, if I want to invest in something that's on sale, I want to go after a value, oftentimes I will use new capital to do that so that I just don't have to be worrying about, should I reinvest dividends? Should I not? Do I need to change my dividend settings? Do I need to pool the money? Do I need to do this and that? Keep it simple. At least that's what I try to do, is just keep it simple. And so I'll use new capital to go after those values. What else? So there's this element of risk. In a certain stock, if this goes to the point before, if it gets ahead of itself, if it grows too large, if maybe the PE ratio, something I've discussed here on my YouTube channel, just gets out of whack, there's an element of risk that if one reinvests dividends into that company, is one really buying at a good value? Is one really buying at a good price? So certainly I will always look at minimizing my risk. And if something has just gotten way out of whack, way ahead of itself, certainly that's an element, a case where I may choose to not reinvest dividends in the company that paid the dividend, and I'll wait for it to come back to reality before resuming that dividend reinvestment. And in the meantime, I could take the dividends, reinvest them somewhere else. And so it's a way I go about minimizing risk. That being said, when it's a core holding, even if it's gone way up, generally, look, maybe I'm doing this differently than others, and I respect everyone's opinion, and everyone has their own way, but when it's a core holding for me, typically I'll reinvest even if the core holding has gone up quite a bit. And that leads me actually to the next point. I don't like to penalize winners. So if a stock is going up, it's generally an indication that the business is doing well. And so if a core holding has gone way up, a core holding is doing well, I don't want to penalize a winner. And so that's why I'll continue to reinvest dividends. Same with maybe even a medium holding or an ancillary holding. If it's going up, I have to remind myself, look, Ian, you don't want to penalize your winners by not reinvesting in the company that paid the dividend. That being said, if it's ancillary or a medium position and it's gotten way ahead of itself, the value looks out of whack, maybe I'm not penalizing a winner there by taking the dividends off the table, reinvesting them elsewhere. I'm mitigating risk. And so it's a fine line. It's an analysis that's always happening. It's an ongoing analysis that one has to do in their own portfolio. But I guess there's this fine line between not penalizing winners and also avoiding risk. So another thing worth considering today is fees. So when one is reinvesting dividends, one wants to make sure that they're not doing so in an environment that carries high fees. So one may choose not to reinvest dividends in the company that paid the dividend if the fees are very high, if they're astronomically high. And so these could be cases where reinvesting in the company that paid the dividend versus pooling dividends and reinvesting them elsewhere, it's not even a function of everything that's been discussed before so far in today's video. It's just a function of fees and minimizing one's overall fees. And in my opinion, the more one can minimize fees in the portfolio, generally the better. That's a good thing, to keep the fees at a minimum. And so certainly that's an important consideration. Thank you so much for that question. This is a subscriber question. It's one that I've received a few times. I really like the question. I think there's no one right way to do this. To summarize, in my own situation, I do a bit of both. I reinvest in companies that pay the dividends, and in other cases, I'll pool and reinvest elsewhere. If I had to peg myself in one of the two buckets, generally I'm in favor of reinvesting in the company that paid the dividends. And that's what I'm doing most of the time, although selectively, I'm not doing it in certain cases. My name is Ian Lopuk. I'm from ppcian.com. If you enjoyed the video today, I please invite you to subscribe, to like, to comment. It means the world to me. 2018 is here. This is going to be the best year ever for this YouTube channel. I am here on a mission. I want to spread as much valuable knowledge as possible in personal finance and dividend growth investing. Please stay tuned. There's so much good content coming forth this year on the PPC Ian channel. I wouldn't have been able to get to where I am now without the support of the community. So thank you for supporting this channel through your likes, your subscriptions, your comments. It means the world to me. Before I leave today, just a friendly disclaimer. I am not a licensed investment advisor, and today's video is not investment advice. Today's video is just for your fun and entertainment. If you are going to go out and purchase stocks or invest in the stock market, please do consult a licensed financial advisor first. Thank you so much for watching, and I will see you in the next PPC Ian Dividend Investing video.